Hey traders from all over the world, what's going on? It's your boy Jeremy Alexander Newsom with reallifetrading.com. Hope everyone's doing fantastic. In this particular video, you are going to be going on a journey with me in something that is called back trading. What the heck is back trading? Well, this is actually the second session that I'll be posting live on the internet. In this particular video, you're watching the recorded version, so you missed the live version. It's okay. I'll be doing another one in the future. Make sure to be posting some comments below if you have any questions in this particular video. But what I'm going to do is I'm going to take a stock that the live audience selects, and I'm going to go trade that day by day. And we're going to look at candles, we're going to look at sentiment, we're going to look at trading psychology, and we're going to learn how the markets work. What's exciting about this particular approach is this is the best way to become a successful and profitable trader right now. This is it. So it's a little cold inside. So it's a little cold outside. Let me hop back up into the studio, get this thing knocked out for you, enjoy the video content, you rock, and of course, thank you so much for watching and for being a real life trader. I'll see you at the end. Live from Music City, Nashville, Tennessee, this is It is back trading in real life, brought to you by Real Life Trading. It's a daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. Type in a 1 if you can hear me and you are here live. Here's some of the list of the participants, and there's the chat pane, and there's those ones. Beautiful. I love it. Andriano, my man from Brazil, how's it going? Bob, how are you? Brad Hauser, it's a pleasure to have you here, sir. Carolyn Bailey, thanks for being here. Clive, Daniel, David, Miss Francois Cease, how are you? Gary, Ken, Kyle, Lance. What's up, man? Scott McKay, my buddy Sammy, Thomas, Vincent. How's it going? If you're here watching this video on YouTube, welcome. Make sure to click that subscribe button down there. It's the big red one with the white letters that spell out the word subscribe. Marwan says hi from Georgia. Atlanta, Georgia. I was born in Canton, Marwan. So also, some of you might be here to just kind of check out how the replay mode or back trading history works on TradingView. That might be another reason why you're here. Anyway, the goal and objective for this particular video, class, session, program, webinar, discussion together is to give you guys another dive deep into one of the practices, disciplines, and skill sets that will make you a better trader. And the cool part is enormously cost you zero money to do what we're going to be doing tonight. You can do this from any computer, from any part in the world. If you have access to certain charting softwares, you can do this particular type of exercise, and it is massively crucial to your success. I can assure you, if you spend at least an hour a week doing this, you will get better at trading. You'll get to have a feel and a certain sense of the market. So I'm not going to drag it out too long because I don't have any sales pitch in this class. It's entirely free, so you can watch the entire thing. And if you're like, man, this guy rambles a lot, it's because I didn't build up a nice, cool sales presentation. At the very end, I'm gonna say, all right, guys, see ya. Have fun. Keep being awesome. That's pretty much how the end of this video is going to go. But between now and then, we're going to be discussing all kinds of cool stuff. Trader psychology, candlesticks, patterns, moving averages, whatever questions you guys have. You're here. I'm here to assist. Sammy says, massively crucial is an understatement. Truly, folks, this is very, very important. So let's just dive in, get started. It's a 3.5-minute intro. It's good enough. The hardest thing for me usually when I'm back trading is picking the stock that I'm going to back trade on. So what I'm going to do is kind of hold like a lottery of some kind. So I'm going to ask you guys a question, and if you get the first person to get it right is going to guess the year on which we start this. So here's the question. What is my middle name? First person types it in correctly. We got Kyle Williams was the first one to get that right. All right, Kyle. Quick on the keyboard. I like it. Alexander. That is my middle name. So Kyle, what year are we going to start off with? Pick a year sometime between 1998 and now. And we'll see if the stock goes back that far. Probably should choose the stock first, but 2007. Ooh, okay. 2007, so that'll be a fun year to back trade. All right, so let's have another trivia question. What college did I attend? And whoever gets this question right, we will pick the stock. Does anybody remember what college I go to? Not that it actually matters. College. Oh man, who needs one of those degrees these days? Kyle's close. You're very close. I mean, it's pretty much the right answer. Very close. Marwan's guessing Georgia. Kyle said Florida, Florida State. All right, well, I'll tell you the answer. Chris Albanese, he's got the city. He got the city. Who's in Gainesville? Sammy says Wikipedia doesn't have the answer. I don't even know if I have a Wikipedia page. University of Florida. I'm going to give it to Chris Albanese. He got the same city. University of Florida, that's where I went to school. I actually went to school initially for finance, to get a degree in finance, because I thought in college, if you got a finance degree, they would teach you what the stock market is, how it works, and how to trade it. In case you're listening to this and you're about to go to college, that is a myth. That is not what a finance degree does. That's not what happens. All right, so Chris, I want you to pick a stock for me. What stock would you like us to begin back trading on today? And then I'm going to have one person pick the month. Okay, so Chris has chosen Microsoft. And the reason I'm doing this, so you guys know, is I don't want anyone to think that I'm doing something unsavory. I don't have another screen up. You just have to take my word for that, but I don't. I'm just trade Microsoft from 2007, go candle by candle. I'm not going to look into the future. Someone tell me what month we should start with. June. Okay, I think I can do it. So let me kind of show you really quickly how you can do this in TradingView. I told you guys about a year and a half ago, the last time I did one of these webinars, that as soon as TradingView had a replay back trading functionality, that I would do one of these webinars. And the reason I like TradingView is because it can be used for free. It has a really cool social component over here, so you can actually private message me directly. I got a lot of people that message me directly over here. It also has like a social media component, so it's cryptocurrencies, forex, stocks, and options. You can click on here and get an idea stream, like what are people publishing. It has an alerts. It's very, very cool. It has watch lists, hot stocks that are moving and going down. It has your ideas, like what ideas are you looking at? So these are the ideas I'm posting. I like TradingView. Very cool social component. Links directly to Twitter right here, which you can follow me on Twitter, by the way, at NewsomeNuggets. StockTwits, you can also follow me on StockTwits, at NewsomeNuggets. Anyway, so it's a very cool social component. So I'm going to come up here, top arrow, top of your screen. Now, I will just throw out this caveat. I don't know if this is accessible to every person, but you can... I think I have the Pro package, or whatever the package is, farthest to the right on TradingView. I have that particular package. GW says, I know we can use a Thinkorswim to backtest for free. That is correct. That is correct. Yes, that's what I used in our last session, actually, was Thinkorswim. So let's go click on this bar replay. Oh, I see. I got to type in the stock first. So I'm going to go to Microsoft, MSFT. And let's click on this little arrow right here. And I think I have to go back. I do. So I have to scroll all the way back. So what I'm going to do is I'm going to go to a specific date because I don't want to see what happens. So let's go to 2007, June 14th. Does that sound cool? June 14th, 2007. I think I can go back that far. 6/14. All right, let's see if that works. And then I'm going to press the bar replay. Again, we'll see if it goes back that far. It should. It should, but it might take it a second or two. Okay, there we go. And we're gonna click on that right there. That's about as fast as I could do it. And so this is where it'll start. So this is kind of like where the actual back trading session and everything like that will start, I think. So again, it'll take a second to load because it's going kind of far back. But that's how you do it, actually. It's really not too bad. Once you press that little play button, the red line kind of selects the actual specific date on which you were trading. Then it's going to erase all of this data, I believe, and then go kind of candle by candle. Now the other cool part is, I'll show you at some point, but you can also manually do this where you just kind of take the screen and move it back some and just literally manually press the next button and make it go forward. But it's taking a lot longer than I expected. It's like a cool crescendo that's just not happening. What if I press play, what'll happen? It kind of froze. TradingView's like, no one's ever gone back to 2007. What are you doing? I don't think that worked. Let me try it again. Why would you go back to 2007? Let me just do this. I'm going to just drag it. That might work a little bit better. Give me a quick second. Let me just go to a monthly chart really quick. Okay, this is a monthly time frame. June was right here. Let me see if this works. Okay. So the go-to functionality we learned doesn't work sensationally well. Ooh, but you have to do it on the same time frame. I'll have to email them about that. So this might not work out as exceptional as I was hoping. Mostly because I was on a monthly chart and it worked on a monthly, but I was trying to go back and forth in between the time frames that did not work. So Sammy says, yes, do it with monthly, then switch to daily to avoid spoilers. Yeah, I was trying to, but it doesn't, apparently it's not going to happen. All right, so let me just do it the old-fashioned way. See if this works. Go to, try this again. Just regular old daily chart. Click on it right there and see if that works. And so, okay, that worked. So this is the daily chart. I don't think we're going to be able to flip back and forth in between time frames, which, again, that's okay. You get what you work with. It's totally fine. So let's kind of start with my first step when I'm looking at a chart. Now, the cool part about this is this exercise is to help you in real time, right? Obviously, we know that this is hindsight. We get that. We're going back to 2007. This goal is it's kind of like putting yourself in some type of weird training room when you actually go to the gym where you could work out for 7 years in an hour. So you can get 7 years of bodybuilding experience in 1 hour. That would be kind of cool. So that's kind of what we're doing right now, is you have that capability of cramming 7 years of knowledge into your trading brain. And it's phenomenal. I would suggest entirely going back and back trading all of your favorite stocks from inception, from day one, and going candle by candle. If you really want to nerd out, it takes a while, by the way, to do that. Even if you do it non-stop, it still takes a bit, especially if you're writing down the trades, you're writing down your entries, all that good stuff. So first and foremost, again, I probably won't be able to switch back and forth between bigger time frames, but what I do is I'm going to zoom out, I'm going to put on my line chart, and I'm going to draw about 3 to 4 support lines on Microsoft. So what I do when I'm looking at a stock, the very first thing I do is I try to determine what? Can you guys tell me? What do I try to determine? First thing I do, pull up a stock chart. I immediately look for the trend. That is correct. I immediately look for the trend. And once I get the trend, so the trend is either bullish, bearish, or sideways, and then I draw some lines. This trend is sideways, right? We can agree on that. We can agree that this trend is sideways. So I'm already not going to be looking for breakouts. Not initially, because when things are sideways, they don't really break out. You look for buy low, sell high. Quick in and out, sell at resistance, buy at support, wash and repeat. So when you're looking for the direction, that's the first thing you come up with, because when you're directionally trading, if you're just going bullish, it's kind of easy. All right, trend is bullish. Just look for a bunch of bullish trades. Right? That's kind of a simple procedure. When you're sideways, you have a lot more opportunities, you have a lot more things. But when you are sideways, I'm going to really make sure this stock proves that it's going to be breaking out. And the reason I do this line with a different color, if you're wondering, is honestly number one, because I'm a little eccentric. And number two, I just want to capture these little pivots right here. And I just thought I would change up the color a little bit. Because I always draw a line, right? I always have at least 2 or 3 lines near where we are now, because that matters. These lines don't really matter as much. We can agree on that. I could not even have them on the screen and probably trade a few months. But if Microsoft ever trades down to this price or this price, we can look for some buying opportunities. But realistically, the lines that are going to matter the most right now is this line, and this line. And I can already tell you guys my plan going forward. My plan from here on Microsoft is I'm going to wait for hopefully a trade down to 2780, and then I'm going to buy it. And or if it does break above here, I want it to prove itself that it's going to hold. And the reason I say prove itself, the reason I say I want it to hold above that price, step number 2 when I'm looking at a trade in this kind of zoomed out portion is I'm trying to find patterns. What has the stock done at these particular prices, right? Make sure you're writing this down, because these are the steps I'm going through my brain, and sometimes it's hard for me to just try expel from my mouth what I'm thinking in my head. I'm always looking for these patterns really quickly, like what happens at these support levels or resistance levels. And you'll notice a few prices over here, you got 2 or 3 failures of that resistance line, and then you got a breakout right there. And then you got kind of like a retest support over there. So that was really interesting. The lines that with my eyes, I saw this. That's why I drew that line. I saw this one, and I saw that one. Those are the only 3 peaks that I used to draw that line. Another support resistance, I used this one right here, I used this one, and I used this one. Those are the 3 pivots, places that my eye saw. And then on this one, I just saw this, and that was it. And then from this line over here, I'm already pointing to it. I saw this one, and that's all that I did. I just clicked on those 2 and I drew it. So the support resistance lines, those are easy. Remember, these are just, you can call them support and resistance. They're just lines. These are horizontal lines. Now, remember the number 3 thing that we're doing when we're trading is determining our time frame. Because I want all of you to understand, investing should be very easy. Right? When I say investing, like long-term. Long-term investing should be pretty simple. You buy a good company at low prices that pays dividends. You know how they make money. Now, that's the key, right? You know how they make money. Warren Buffett style. You know what the company does, or you at least done a lot of research and you have a pretty good inclination. Not some random biotech pharmaceutical company that just created a pill that cures knee cancer or something. You don't want to go down that route. You want to know exactly what these companies do, and we all know what Microsoft does. We know how they make money, they pay dividends. So if you're investing like long term, you're thinking, all right, I'm going to be putting money in this for 3 or 4 years, then it's real easy. Just buy some here. If it ever gets down there, buy some there. And if it ever gets some down there, buy some there. That's it. Long-term investing, that's pretty much all you do. Look for good prices to buy long-term and then just add some money when it gets down there, if it gets down there. Which it eventually will, usually does. Right? Everything pulls back at some point. All right, so determine our time frame. We're not going to be investing. All right, we're going to be actively trading this thing. Because again, investing, I'll just press play on just about anything and you're going to make money on it. So we're going to be doing an active trading. Now, you can also determine what type of instrument you want to play. Do you want to play options? Do you want to play stock? In this particular example, we're going to be using stocks, or kind of trading the stock mentality. But I do want to let you all know, give yourself permission to back trade options. Because here's the thing, you may not know necessarily at what price you bought the option, or what price it would have been, or how much it would have cost, or so on and so forth. But what you would know is if the trade worked, right? You wouldn't know that, usually. Like, yeah, that trade worked, or nah, that trade probably wouldn't have worked. Okay, so we're going to start zooming in now. So I already mentioned we're going to be doing a stock type of trade, and I'm going to turn on the candlesticks. And these are pretty much all I'm going to use. I'm not going to use any moving averages. I'm not going to use of any kind. You can certainly use moving averages. There's nothing wrong with that. I just want you guys to know I love practicing back trading with candlesticks because I'm looking for patterns, right? But if you do want to trade options, as Thomas said, you can use the Thinkorswim tool, the on-demand, and you can go actually back trade that option. So you can have this screen up, and you can have your Thinkorswim screen up, and you can see what option would have done what, where, when, why. So that is tangibly possible. It can be done. I'm just letting you know, if you don't have those tools, you don't have those access tools, or you just want to fly through it, you don't have to have everything. It doesn't have to be all fancy. What you do want to create, though, is when you're back trading, one of the goals of back trading is also to learn the personality of the stock. You're going to learn the personality of the stock a little bit, right? So let's pull up Microsoft. What we're doing now, my next step is I'm looking for gaps. We determined the trends, we drew our lines, we know our time frame, and then I'm going to go look for gaps. So on Microsoft, we got this gap right here, some type of retest gap. The reason I say it's a retest gap is because you had a lot of buying down here. We can look at visually these candles and notice and dictate that there's a lot of buying. Kind of have this little double bottom pattern. So people were buying here at this support as they should. And then the same people who sold the stock short up here, what are they doing? They're trying that again. That's what they're working on right now. They're going to try to short it at this resistance. So we're getting a lot of volume coming in. That's kind of interesting. Again, we're pretty close to a resistance. My goal in this particular trade is going to be, we already bounced off my purple line. That would have been a nice entry in some form or fashion right around here, right? So this particular support. So since we're not there, this is one of the most important parts of trading. The part that I'm about to do right now. You're going to want to create a plan for what you want the stock to do. And you're going to write that plan down or draw it, whatever it is. And once you do that, you're going to simply follow it. The hard part is not the plan creation. We can all agree that the hard part is usually following it. Because in back trading, we can press the next button and we can fly through an entire month of data very quickly. When you're trading in real time, that month can feel like an eternity, especially if you have to pay the bills. That's why you can always choose different stocks, right? You don't have to get married to just one stock. You can, however, you definitely can trade just one stock. If you're trading just one stock, you're going to do a little bit smaller time frames than the daily chart. You're going to be zooming in to the hourly, the 15, and the 5, and you're going to be playing the ins and outs of that particular stock, right? If you're only trading one, but very, very few people have that discipline to trade just one stock. So we're going to look at candles. I'm pretty sure all I have to do is press, that's to real time. Oops, almost did it. Good call. Forward and play. So I'm going to do this, and we got a next candle. All right. So let's talk a little bit about this candle. That's going to be most of the goal tonight is candlestick analysis and just determining some of the sentiment. So this analysis, this candle, inside day candle, volume declined. It's almost entirely within the range of yesterday's candle. So the low of yesterday was 30.43. The low of today was 30.42. So it's 1 penny away from being a perfect inside day candle. Inside day candles represent indecision. People don't know if they're buying, people don't know if they're selling, they're confused, they don't really know exactly what they're doing, so they're not entirely sure. So here's the plan part. Here we go, we're going to write it down. Nothing amazing right now. I would prefer to buy down here at 27.80. If Microsoft breaks above 31.27, I'll consider a bullish play, but only after a nice retest and bounce. And that's the plan right there. Now again, you can get it more granular and more quantitative if you want, where you actually select a certain amount of days, certain amount of time. You can say, I'm not going to look at this trade for a week, nothing's happening, so on and so forth. You can kind of create whatever you want. But what this says is you'd prefer to buy at 37.80, and then if Microsoft breaks 31.27, you'll consider bullish play after a retest and a bounce. So that says I'm looking for this, this, and this. This being the key thing. Now, how do I know to look for that? Well, remember just a few moments ago, I said, hey, step 2 or 3, look for those patterns, right? What has the stock done around these prices before? There's been a few instances where it's came to these resistance and just went right over. So I really want it to prove itself above that resistance level. I want it to just really close above there and give me some good evidence that it's going to hold. So the next candle, oh, I pressed play. There you go, let me pause. Still pretty boring. Now, do I want to short this? This is going to be a good question, right? Do I want to get in bearish here with a stop there? Not necessarily, because the risk reward is kind of poo, right? We know that it's traded down to here before. Now, that is a 1-to-1 risk reward. It's not bad. But again, if I trade the stock every day, and this was the only stock I was allowed to trade per my plan, yeah, I'd be probably trading that breakdown. I'd be watching closely for this little move to occur. But what we can get, and what we have noticed, is we're not really going very far. Volume is kind of light, so this could be a flag pattern of some sort. What I'm now doing is I'm looking at candles. I'm trying to find some patterns, some waves, something like that. It looks like we got a 1, 2, 3, potential wave 4, relative wave 5. Could I be wrong about that? Yeah, definitely. There's a good chance I am. But again, if I trade this stock often, if I saw this every single day, you look at these patterns, right, and you're trying to find the sentiment. You're trying to find what are people thinking. And as you learn Elliott Wave, you'll notice that you'll remember that it works on fractals. The reason I even drew that line is because these two candles are intriguing, this one and this one. We could all agree that those two candles are pretty radically bullish, right? And we're making higher lows. So we're going up for the most part. You got this resistance right here, but the trade that makes the most sense is bullish, in my opinion. So as I looked at that bullish trade, I looked at those candles, I saw that we're not really doing anything recently, so I'm like, well, okay. So tomorrow, if I were trading Microsoft all the time, I don't think I can day trade Microsoft in this time frame, but what I would say is I would just simply watch for a bullish move. I'd watch for some type of gap. If it doesn't happen, cool. But if it does happen, I would be prepared. So all I'm gonna do is write it in. If I were day trading this, I would keep an eye out for bullish gaps, candles, volume on the hourly, 15-minute, 5-minute. Now I can't zoom into that right now. Otherwise I think I'm gonna lose the data. And obviously it's all the way back in 2007, so I couldn't look at that anyway. But we got the move. Let's go to the next candle and just see what happens. All right. So first and foremost, what I'm gonna do is I'm gonna zoom into this particular candle, because it seems that my first opinion was right. So let me zoom into this candle. And the reason I want to really zoom in and show you this is because this is important. So this gap, was this a bullish gap or a bearish gap? It was very small, but this black candle gapped down as a bearish gap. And it was actually a bearish retest gap. So it gapped down, trade up, and then rolled over. That's exactly what that wave did on the intraday time frame. So, did I trade this bullish? Nope. No, I did not. Why? Well, I created the plan. I said this is what I wanted to do. It did not gap up. Could it have moved just as nicely bullish as it moved bearish? Yeah, could have. Right? I did mention earlier that I was saying it could break down bearish. Remember that 1-to-1 risk reward ratio? Could maybe get in here, stop here, target here. It's okay. All right. Again, maybe I could have day traded that in real time. Maybe I would have come up with a different plan. But bottom line is I didn't. All right. That's a fact, because I did not. So I was like, okay, well, let's move on. Now the cool part is I still got this plan down here. Nothing amazing right now. I'd prefer to buy at 27.80. Now, of course, if I had shares, this is where it gets fun. You can do other strategies, right? You can pretend you're doing a covered call up here, maybe. You can pretend you're doing a bear call spread or something. There's other things you can do when you're back trading as far as the charts are concerned. But I still am going to wait for really a trade down to 2780. Or at this point, what I'll say is, or if we get a bounce off of the purple line. Purple line. Purple line. Now here's an interesting question. Would I be wrong to just simply create a limit buy right there with a stop right there and have a target right here? Would I be wrong to do that? No. Could that work? Sure. It's worked before, right? It came down and bounced right around here. If you have struggles doing that, if you think, oh man, why, no way, I need way more confirmation. I need way more information. I need way more indicators and candles and volume. I need much, much more than that. This is a phenomenal arena to practice that. Because you've all heard the statements like get in early, get in for the big boys, get in for the big money, all that. But when the heck do you think they're getting in? Do you think they wait for confirmation? No, they're getting in at prices they like. They just buy there because they have money and they don't care. They're like, all right, I'm just going to buy here. So they just simply, right? There's no indicator that gets you in right there. Is that they just simply buy, and then when the trade up, they made a little bit of money. So you can always practice it and build that muscle and determine, is Microsoft that type of stock? Does it and can it be something where I just set up a limit buy and let it trade down into there and learn? So the cool part is about back trading, this is going to literally cost us nothing to determine, does that analysis work? Could it work? Build that muscle slowly. If you don't have the muscle, build it, because it's a very lucrative strategy, and better than lucrative or strategy or whatever, it's easy to automate. Right? You don't have to be in front of the computer. You just set up the trade. Okay, I just want to buy at support. How hard is that? You can teach a 4-year-old to just, hey, look, Johnny, buy at this purple line and set a stop down here and have your target up there. And then do an OCO order. So when this one triggers, an OTOC order triggers other cancels order. Have it trigger this entry. Then once it triggers the entry, it'll trigger the stop and trigger the target. And whichever one it hits first, it'll cancel the other one. I mean, that's automated trading at its finest. You've heard over and over and over that trading simplistically is the best way to do it, the best approach. It doesn't matter what the system is. You could buy off support, sell at resistance, moving averages, whatever. That really doesn't matter, what you use. What is important is, could you explain your strategy to a 7-year-old? Right? Could you tell someone who's young, hey, this is how this stuff works? And when you do that, and that kid understands, like, yeah, I get it, then you know you have a pretty simple strategy. So again, this is going to cost us absolutely nothing to figure out if it works. And what we will do is we're going to learn a lot about Microsoft. Now, what we'll notice from here is, did this trigger? No, it did not. Here's what's really interesting to take away on this particular trade. And you'll see me do this all the time, especially if you ever watch me day trade. Notice this volume and notice this candle. It's doing what I wanted it to do, but before it triggered my entry. If this candle breaks lower, my theory is it would go a little bit lower than my $29.79 price range. Would I be wrong? Would I be right? That part I don't know. We can always find out later. But there's a nice increase in volume here. We know some traders might have gone bearish there by there. So if the stock starts doing this, they're going to get trapped and they're going to be buying to cover. How do we know that? Because we literally thought about doing that. So if we thought about doing that, someone in the world also thought that. I'm asking myself that question all the time when I'm day trading. What are these other people thinking? What are they doing? How do they feel? Right? Don't ever ask what the stock's going to do, because the stock is only going to do what? What people want it to do. What the masses want it to do. What the investors, what the traders. Stocks move when people tell it to buy or, when they buy or sell. Or if it's a computer, an algorithm, whatever. People created that. I create algos for traders often. So people still create the strategy and they still think humanistically, right? They're still approaching the market from a certain set of eyes. So always ask, what are people feeling? Look at when you read the candles. And so in my opinion, right, all you're doing is when you're trading is you're coming up with your opinions and you're creating your price painting, if you will, your art of the chart. And you're saying, this is my opinion. And based on your opinion, you can construct a certain approach. So in this situation on Microsoft right here, this volume with this candle, if a stock did this, if a stock breaks the low of that candle, it's probably going to go a little bit lower. Maybe something like this. So what I'm going to do is I'm going to wait one day to find out as far as the bears are concerned. So if the bears start breaking the support, I'll look to buy a dip. Otherwise, with this volume coming in, I'm looking for a bullish trade tomorrow. If I was day trading the stock, looking for a bullish trade. Day trade. So if this was real time, I could zoom into the 5 minute and watch it. And the whole rationale behind that is just purely the volume. Purely volume. So next candle. Aha! Boom. Now that was cool, I think. So what ended up happening is this bullish candle did get taken out, right, based on that volume. But what we did with that analysis is we saved ourselves a few pennies just by determining volume. By looking at the candle and saying, if this thing breaks lower, so right, obviously the bullish day trade didn't work out. I didn't write down that I was going to day trade a bearish, but what type of gap is that? On a smaller time frame, this is a white candle gapping down. It's a bearish gap and go, right? Once it broke the low of that candle, again, if this was a stock that all I did was watch this one particular stock, I can assure you I would have shorted it through somewhere in there. But again, that is an important takeaway. Just that volume of that candle and knowing, instead of putting my entry here, I'm going to put it a little bit lower, just a tad lower. So now what I'm going to do is I'm going to drop my entry just to right there. And this will be our first trade that we will track if it gets triggered in. Right, it's right there. And again, all I'm doing is I'm just buying at this exact low right here. This low and this low. Now, could we go bearish? Volume is coming in. It's a bearish gap and go. We're making lower highs. We certainly could go a little bit lower. But what we did is once we determined that breakdown, we said, hey guys, it's going to go a little bit lower than this purple line, which it did. So now that's down here. Remember, this is literally a free trade. This is going to cost you nothing. You might as well find out and start building that muscle. And if it breaks lower and if it comes down to here, then we have a plan to go bullish down at 27.80 anyway. So if it does stop us out, cool. Trade down to here and we can make it back if it runs. But what if it bounces? What if we get filled tomorrow and it does this? What if that happens and you're not in the trade? How many times have you set up a trade and you're like, nah. And then it worked really well. Your whole plan was flawless and the only thing that happened is you just simply didn't take the trade. My friends, here's what's really cool. If you can decipher and feel and know when you feel uncomfortable during something, attack that and figure out why. Because the most profitable trades happen when you're uncomfortable. So recognize when you're uncomfortable and attack it. Try to figure out how you can make that breakthrough. Is the trade working really well and you're up a lot of money quickly and you get uncomfortable and you sell? Dive into that. Figure out why the heck you're doing that because you want to let that winner run. Okay? If a trade's coming to your support and you've already planned it, right? You planned it a whole day ago and you're just not going to take the trade, figure out why that is. Right? If you can come up with a justification like, okay, a lot of volume, this is a bearish gap, I don't really like it anymore. That's fine. I get that. But in a back trading scenario, if this setup right here makes you uncomfortable, do it anyway. Literally do some trades to make you uncomfortable, because here's one fact I've learned through all of my business coaching and paying for mentors and reading books and going to conferences and seminars and reading inspirational quotes on Instagram. You grow the most when what? You grow the most ... You grow the most when you are uncomfortable. Simple as that. So if you can find something that makes you uncomfortable in trading, then go do that, even if it's virtually with fake money, just to grow a little bit. Because when you're outside of your comfort zone, you're automatically going to grow. So we're going to do this trade, right? Because I planned it. I said, we're going to track this trade. Now, how do I know I'm placing my stop right here? That's going to be a very good question, right? Why am I not placing my stop right there? Well, if I place my stop right there, I'm probably going to get stopped out. What about here? That works too, but I'm just placing it below the low of this candle, giving it a little bit of room into that gap. And there was no other reason other than that. That was really it. I just wanted to place it below the low of that candle, because that's where we went bullish. So again, just for practice, what happens here on Microsoft? All right. So did we get triggered in? Yes, we did. All right, we had a limit buy. We got triggered in. Are we... Oh, hold on. No. Are we uncomfortable? Did that make... I mean, did you guys feel a little bit uncomfortable when you did that? You're just like, oh, why would you buy there with that candle? With that kind of volume? Ugh. I was a little uncomfortable then. I saw that volume, that huge candle, like, oh, I don't know. This could be a double top. There have been so many times where I did not want to take a trade because I was afraid. Man, like millions of times. But what happens is if I look at my plan, I said, all right, I was going to do X, Y, Z. Oh, geez. Then I have to do it, right? If I write something down, I say, all right, I'm going to do this. Then I got to do it. Marwan says, is that a double top? Not until it closes below this candle. No. Not until it closes below that candle, because this is the support. So if we get a bearish candle like this tomorrow, we're going to go a little bit lower. So that's going to be my plan as of now. I'm going to scoot this down. And now what I'm doing is I'm going to tell myself what I am doing in this situation. If Microsoft breaks the low of today, she likely will go lower. What does that do? Me creating that plan simply said if it goes lower, it creates a sense of certainty because I wrote it in here. Right? So if it starts going lower, you're like, well, I mean, I did say that it was going to go lower if it breaks that low. I will give, I'll say if it doesn't, I'll give Microsoft 2 or 3 days and then reanalyze and move my stop. Why 2 or 3 days? Just a random amount of time. It could be a week, it could be 2 weeks. But we're short-term trading here. Next candle, here we go. Oh, that was a play, I pressed the play button. Okay, so next candle. Nothing so far. But we didn't break the low of the day, so maybe this trade works. It could also be a flag pattern. And then it rolls over. That's also possible. But 2 more days, and I'll be able to move my stop. Let's go next day. Next day. Ladies and gentlemen, what should we do? Do we move our stop? It's been 2 to 3 days. That's the candle that we would want to see. Yeah, we move our stop right below that low. Because at this point, if that candle breaks lower, right, you get that kind of volume, this candle breaks lower, it's not going to go higher. This is the candle that we want to see right here. But here's the cool thing that I want you all to recognize. Again, I have no idea if this trade is going to work or not, but this trade would be profitable right now. What most traders do, and I'm coming up with a video on this soon. If you're watching this after the video is posted, make sure to Google the next video, why I hate the term confirmation. That's coming up. If you wait for something called confirmation, a lot of you were taught the wrong way by wrong people. If you're waiting for confirmation, you're going to wait way too long. You're going to wait for this trade to be up here before you're getting it in. Confirmation doesn't exist. It's a myth. Okay? And when you do wait for quote unquote confirmation, right, and the trade sets up and then it doesn't go in your favor, it really attacks your psychology. Because mentally, we as perfectionists and artists and scientists and engineers and doctors, if we say something is confirmed, that's what's going to happen. Dang it, right? So if we're like, all right, this trade's confirmed, womp, womp, womp. Like your brain's like, I don't know how to handle this. So the point I'm trying to make is we're already profitable on this trade. We're already in. I don't know if it's going to keep working, but I do like that volume a lot. And this trade made a lot of you uncomfortable. A lot of you were already thinking, no, dude, this is not going to work. No way this works. This is a double top. It's going to go lower. It's going to break this support. Yeah, but what if it doesn't? So I've moved my stop. I gave myself 2 or 3 days. And so now I'm going to say, I'll wait another 2 or 3 days and see what happens. So we've already been in this trade 2 to 3 days. Now the cool part is, where do we put a target? So we can put a target here. We can exit a little bit there if we hit it, right? And then we can put a target here if we hit that. If we hit this trade, that'll be about a 2.5 hour trade. Actually, I remember my previous stop, but I can use this kind of cool tool. Give me a second. This is kind of a fun little tool. Entry was there and stop was right below low of that candle. Right there. So 2 R's is right here. So this trade would be 2.5 R's. I'll just exit all right there. If we hit it, of course. So 2 more days later, I'm just going to wait. Who cares? At this point, I've already moved my stop. That is your goal, my friends. If you can get that stop up, now you don't want to move it too quickly, right? You want to let the stock do its thing, but you do want to create a plan for yourself. You always want to know when you are moving that stop. And my friends, I know this is small and trivial, but if you say, I'm going to move my stop in a week, the next day you start freaking out because the stock's going in your direction and you move that stop, even though you're profitable. Dude, you literally said you're going to move it later this week or next week. Why are you moving it the next day? Say what you're going to do what you're going to say. Right? That's crucial, man. That's trading 101. If you say you're going to do something, then do it. That's the discipline that you got to have. Because you never know. It's a coin flip, more or less, and you've got to mitigate risk. So if I get stopped out on this trade, which is fine, I'm going to lose very small. All right? So another candle, boom, just got stopped out. Cool. Very, very small loss overall. Very small, like 0.2 R's or something. I can have, and here's the exciting part about this. I love this because what will happen on the very next trade? The very next trade, if I go up 1 R and I exit, what am I doing? The next trade we take, if I go up an R and I exit that trade, I am profitable at that point. Right? I'm already profitable. Now, some traders will say, well, Jeremy, I mean, the market maker knew your stop was there. That was just a flash. Like, what if you just kept your stop down here? Well, if I did keep my stop down there, I would have moved it to below this shadow now. But the funny part is, how would the market maker know that our stop is there when we're literally doing this in a simulated environment? Have you guys ever thought that one through? How is the market maker going to hunt our stop when we're in 2007 virtually doing this for fake? You know? It's like, no, they're not hunting your stops. They know where everyone's stops are, and sometimes it happens, sometimes it does. They're not looking for you. All right, so the cool part is very small loss on that trade, about 0.2 R's. It happened in 2 days, by the way. I'm still going to look for it to trade down to 27.80. So that's going to be my play, 27.80. And then just in case that lower shadow, if we get a close above here and all of these bears get trapped, we're bouncing off that purple line, I'm going to try it again. All right, next candle. Very small candle. All right, cool. We'll start setting this up. So I want to close above 30.15. Why do I want to close above there? Well, this was obviously a price that there's some bears out there camping out. So on the hourly chart, this is going to be some type of inverted head and shoulders pattern. So I want to close above 30.15. I'll get out somewhere around here, and if I can make more than I just lost, I'll be profitable. And that is literally the goal. All right, so here's the cool part. Did this close above that level? No. Now, what some of you might be wondering is, okay, well, how would you get in if it's gonna go close? I do a 345 contingency rule on any trade that I want to close above there. If your system has it, like Think or Swim, you can do 3:59 p.m., like right before market closes. So the stock has to literally be above that price right as the market's closing. Does that make sense? So right, okay, cool. So that's how you can do it and automate the trade that you want the stock to close above or below a certain price. Now, here's what's interesting is, keep in mind, we did get whipsawed right here. So that wick came down and got us. And now it's kind of going in our favor, and I get that. So I'm like, all right, market makers, I see what you're doing. So we made a little bit of a higher high. We did not close above it. And this part, again, since we're here, this is the part, I would love to zoom into an hourly chart to see how these candles look. But what I'm going to do is bring it down here now, because it looks like it's trying to form a double bottom. This is a retest gap. White candle gapping up. So I'm going to expect a retest tomorrow. I'm going to expect a pullback. So I'm going to do this setup right here. Limit buy. So I say limit buy. But limit, so this is going to try to get it at 29.88. And I'm going to write down what I want it to do. If this doesn't trigger tomorrow, I don't mind taking a breakout above today. It probably will trigger. Let's go to the next candle and find out. Boom. Nifty, huh? Now, let's talk about this. How did I know it was going to bounce there? Well, that's a proprietary secret, my friends. Just kidding. I used the highs of these candles, right? I used that resistance right there. This little, that's where the stock stopped moving. That's all I did. So it did trigger. So now what I'm doing is, you'll get the hang of this pretty soon. I want the stock to make a higher high in 2 to 3 days. If it does, I'll move my stop. I want to exit around 1R of gain to make more than I lost previously. Now, even if I don't win on this trade, if I do, it'll be cool, because I'll show you my next trick. But if I don't, we're just going to keep trading until I'm profitable. It's just going to be a matter of time. I will be hitting some winners. It is just a matter of time. So 1R is right there. Yep. So that's where I'm going to exit, right at that original resistance. So what I want to do is I'm going to tell the stock, hey, dude, I want you to break above the highs of these candles. It doesn't have to, but that's what I want it to do. If it chops around, does its thing, I'm going to give it 2 to 3 days. We're going to wait it out. We're going to see. Next day on Microsoft, nothing. A little bit of volume, that's cool. Next day, nothing. Next day, giant red candle. So on Microsoft, we're losing. Volume is coming in. We're going to look at this candle, and it's going to go, all right. A little bit of an upper shadow, a little bit of a lower shadow. Let me just scoot this over so you can kind of see that candle a little bit more. So what do we do in this situation? Do we move our stop? Right, it's been 3 days. What do we do? And I would say, yeah, in this situation, we can see the trade's not going to work. Unless Harry Potter wants to come in and wizard this one down for us, we're going to place our stop right here, right below the low of that shadow. Right, so our original stop was down here. So if we get stopped out of this trade, we'll be about 0.8R loss, give or take. Right about there. So between last trade and this trade, I'll be down about an R. Just one singular risk unit. But the cool part is what we're starting to do is we're starting to get the hang of it, because this 2 to 3 day time frame I have figured out is now going to be what Microsoft and its little pattern is going to be good for. Because this thing was exactly 2 days after we got triggered. We got a beautiful inside day candle doji right here, and we knew for sure there was going to be some type of nice gap. By the way, beautiful bearish retest gap. Look at that upper shadow. It opened here, it retested, and it rolled right over. Could have even day traded that bearish. So we moved up our stop. We'll see if Harry Potter wants to come in and wizard this one up for us. He does a little bit. So I'm going to hold the trade for a little bit longer. Probably going to get stopped out. I'm already writing in my notes. Probably going to get stopped out on this one. Oh, wow. She rallied. Cool. All right. So now we're actually profitable on the trade. And it got a close above there. So now I'm just like mind boggled. Number one. Number two, let's talk about this for just a quick second. How many of you, and let's be honest, would have freaked out on that day and gotten out a little early? Somewhere around here. Now, trust me, here's the cool part. Here's the really cool part about this whole thing. I want you all to know this. I want to show you inside my soul for a second. If I was watching that, I would have wanted to get out of that real bad. Real bad. But if I wrote it down that it needs to make a higher high in 2-3 days and then I'll move my stop, whew, and I move that stop in advance, oh my goodness. I mean, you guys would probably fire me. Right? Real life trading is done as you know it. Jeremy moved the stop before he said he would. Man, it was good while it lasted. You know? So it was one of those things where it's like, okay, that's that plan where you just got to get used to following, because again, you never know. Yeah, it looks like it came right back down. Again, I would love to zoom into the hourly chart. I'd probably have a little bit better of a beat of what's going on if I could see the hourly, but that's okay. At this point, Harry Potter did come in and wizard this one higher for us. So thank you, Harry. You're the chosen one. At this juncture, I love the fact that it closed above here. I got a plan to move my stop. I can't just move it. I can't just go, all right, I'm going to move it there. Nope, 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 because I've already moved it once. So I held my breath and it popped. Whew, that was crazy. So, did you guys guess what I'm going to do? Any guesses at this point? What am I about to write in? I still plan to exit at 1R. Target. I'll hold for 2 or 3 more days and then move my stop. Tim Thurman, you got it. Now again, 2 to 3 days. Why 2 to 3 days? Because we're actively trading this. Again, I've already told you, if we were longer term, like 2, 3, 4 months, and I didn't need to make money off the stock, I would have bought right here. My stop would have been down here somewhere, and we would have just been just chilling. I wouldn't even care. I wouldn't even looked at it for a month and a half. I mean, if you're in a trade for 2, 3, 4 months, what in the world are you doing looking at it day by day? I mean, take it, relax a little bit, calm down. It's not going to do anything. All right, so the next candle. Now, we could get a giant reversal here. That's fine, but I'm just going to hold strong. Okay, not a great candle. Better candle. Much better candle. 2 to 3 days, folks. 2 to 3 days. And boom. What happened on that trade is we went from panic and scare, uncomfortableness. Because here's one thing I want to make sure we all do. When you're trading like this, when you're back trading, I want you to pretend all these candles, every trade you do, is like $1 million on the line. This is your last. This is all you got. Because I'll tell you, don't know if this is a good story or a bad story, but I'll tell you a quick story anyway. Type in a 1 if you've heard the people on the internet selling you classes that said, I lost all my money, I went broke, I was despondent, and now I'm a profitable trader. Let me teach you how I did it. Here's the thing. That happened to me. It probably did happen to them. But the reason that you've seen that over and over and over is because it probably is true. For at least some of them. I don't know about all of them, but it's probably true. Now, I'll give you the difference between me and everyone else in a second. Well, I shouldn't say me and everyone else, but the large difference. The reason that I turned my trading career around, folks, is because I was at rock bottom. When I'm talking about, hey, this is the last dollar you had kind of trade, I was negative a lot. Like, I owed people money. I borrowed money to trade. Like, it was rough. I wasn't even down. I was dark place. So I had no choice but to make it work. So like, I'm sitting there, okay, this has to work. And when you're put in an environment, when any one of you are put in an environment where you absolutely, unquestionably have to do something, don't you guys always get it done? Don't you? So some of the traders that are going to have the hardest time trading successfully is the ones who don't approach it with that mentality. You do kind of have to at some point approach it like one of two ways. If you approach it where you've got money, you've got your job, you've got a good amount to trade with, then just do longer term. If you don't need the money, just do a little bit of longer term trading. Buy at some support, hold for 2 or 3 months, make a little bit more money, right? If you got to do this to pay your bills or to prove to yourself that you're successful, you're not a giant, complete jackass, you're not just a miserable failure. If you're going to do that, then you're going to have to put in a lot of time. And you're going to have to figure out a way to create that money and make it real, make it happen. Now, the difference between myself and most traders is they figured it out. They probably got an idea of how to make a little bit of money, and they're like, all right, I'm just going to go sell these classes now. Cool, I made a little bit of money. Let me go sell some stuff. Because selling stuff is easy. Marketing is really, really easy to do. I still haven't, the whole entire time of real life trading, I have spent, to this date, $300 in marketing for 3 years. And most of them are just trying to test out a page or a link or something. I don't pay to market. I teach people who care. I don't try to sell them anything. That you want to learn how to trade, that's fantastic. Let's do it together, right? I see this as a mechanism where people are going to be put in the battle of their life to figure out who they really are, what they really need, figure out their weaknesses and figure out their strengths, and see if they can become a better person. Because in order to trade successfully, you do have to become a better person. It's that simple. You're going to have to become more disciplined. You're going to have to follow a plan that you wrote down. Most of you can follow plans pretty well if you're going to get fired unless you do it. But what if you don't have any boss and no one can fire you? Most of you are all really good at not getting fired from your jobs, but yet you all know how to get fired. Don't you? Type in a 3. If every one of you here right now who has a job knows exactly how to get fired from that job. You all know how to get fired, but yet you don't. Why is that? Because being fired is painful. It's uncertainty, it's uncomfortable, like where are you going to get your money from, what are you going to do, how are you going to pay your bills, how are you going to live in your house, what if you get kicked out, how are you going to feed your family, you got kids and wives and husbands and daughters and, It's difficult. Getting laid off, a little harder. It can happen, unfortunately, downsizing, restructuring, whatever you want to call it, but it's still a little harder. So what I'm really getting at is what has to happen. You've got to be able to follow your plans when you create them. Whatever your plan is, however eccentric it might seem, if you say, I'm going to get in there, then you better get in there. If you say, I'm going to get in at this price, then you better get in that price. If you say you're going to have that stop set, then you better have that, stop. If you say, I'm not going to move that stop for a week, and you move it after 2 days, oh man, my friend. Whew, market's going to rake you over the coals. Because the market don't care about your $400 that you're putting into the market, right? Someone somewhere out there made millions off of this move right here on Microsoft. Millions. They don't care about your $400. It doesn't matter to them. Patrick says, you will fire yourself if you don't have a plan. You should. I agree with you fully, man. You should fire yourself if you don't. Well, if you don't have a plan or if you don't follow your plan. Yeah, absolutely. How much longer do you guys want to go? Believe it or not, that was already 60 minutes. You guys want to go longer? Am I boring you? Are you getting tired? What time is it? 8:04. Let's keep cranking out. We can keep going. I used to do this for 7 hours a day, every day. So, all right, you guys are good. Cool. Next trade. I'm thinking double bottom on a retest. Limit buy. Anyone want to guess how long I'm going to give this trade to trigger? 2 to 3 days. Now again, you can take away that 2 to 3 day. You can use that if you want. That is truly, I use that 2 to 8 day or 2 to 3 day, depending on the stock. Everyone in my trading room usually hears me say 2 to 3 days. It's 2 to 3 bars, whatever time frame I'm looking at. If I'm trading the 5-minute chart, I say all the time, I'm going to give this about 15 minutes, which is 3 bars, 3 candles. Anyway, I think 3 is a Fibonacci number, if I'm not mistaken. But anyway, I'm going to give this 2 to 3 days to trigger. I'll verbally say this, but if it hits this line before it triggers, I will cancel this trade. If it doesn't trigger in 2 to 3 days, I will cancel this trade, and then I'll just reapproach something else. Based on this volume, it says to me that we're going to go a little bit higher. Richard says 3 is the minimum amount required to have a pattern. Yeah, I think you're correct. 2 to 3. I like 2-day patterns. They're not very common. They're usually 2-day pennant patterns like this one or this one. But yeah, usually that 3-day window is right around 2 to 3 days is right around that the pattern is forming. Is it a flag? Is it a stair step? Yeah, you're exactly right. So let's go forward another day. So let's talk through this one, right? I said 2 to 3 days. I was going to leave it open. However, we got the retest, right? It opened all the way down here. Look at the volume on this candle. If the stock breaks the low of that candle, do we still want to get in? Probably not. No, probably not. I don't think we do. Because, again, good volume, very nice candle. This particular candle almost is a perfect shaved bottom candle. The open and the low is the exact same. So it's not quite a shaved bottom, it's very close. So bottom line is this was the retest today. Again, I didn't write it down that I would cancel, because you're not going to necessarily have every single candle planned for all the time. But what's important to know is when you would stay in, when you won't stay in. We wanted it to have a retest, and it did. And if it broke that low, I'm not really excited about it. So I'll leave it on the screen for 2 or 3 more days, but in real life I would cancel it. But anyway, same part, I still would have canceled it here because it did its thing. Now, in this interim right here, would I be able to be looking for bullish day trades? Sure, right? Again, if I'm only following this one stock, if I'm only trading Microsoft, trust me, folks, you can make a lot of money trading just one stock if you really want to. You're going to have, you're probably going to be buying the shares. You're probably not going to trade options necessarily. You can, but Adriano says, may I ask you, could you use a trailing stop in this case? Absolutely. Totally. So again, my plan was to exit here. Why did I want to exit there? Because I had just lost on a trade, and I said that's what I was going to do. Right? Since I just lost on a trade, so here's some really cool math I want to share with you folks. So my first trade, let's say I lost -2R. My next trade, I am up 1R. The next trade I take, you guys want to see something cool? The very next trade I take on Microsoft, I'm going to make sure that I can lose less than 0.8R so that I'm still profitable. That's what I'm going to do in my next trade. I want to trade that. Now, again, it might not happen. I get that. But I'm going to try. I'm going to really try hard to lose less than 0.8R on my next trade so that I'll still have positive carry, because mathematics, I'm 50-50. So if I lose on my next trade, then I'll probably win on the next one. Maybe. Doesn't have to, but I'm 50-50. So anyway, yeah, you could have absolutely used your stop. And again, if you're doing longer term trading, gosh, this would have been so easy. Longer term trading is so simple, folks. It's not difficult. Find some good support, buy off of it, hold for a while, set a stop just in case something crazy happens, get a little bit of wiggle room. Here would have been my order, something like this, right below that candle. This would have been how I would have taken this trade on a longer term trade. This purple line, I would have just set up a limit buy, would have bought right there, stop below this candle that occurred before the gap. And right now I'd be up 2Rs on the trade. And that would have taken, we would have gotten triggered in right here, so it would have taken a full month. Gorgeous double bottom, by the way. Type in a 1 if you spot that double bottom. Most of you here did. Most of you got that one. Nicely done, by the way. Nicely done. Okay, so we never trade down to 27.80. We'll go 20 more minutes. That's what we'll do. We'll go. I don't want to hold you guys too long. I know you got families and stuff. Microsoft closing above resistance, big volume. We have 4 white candles in a row, and there's a lot of volume here. This is a retest gap, so I'm going to expect it to retest, chop around. And remember, I want to prove that it's going to really crank it out. So let me see what the next candle does. Ooh, next candle, interesting gap down. Okay. Kind of a lower shadow candle. Interesting. I would love to see that hourly chart, but it didn't really hold that resistance, so I'm not super confident. Do I want to short right here? Nah. Could a short work? Yeah, totally. I mean, that much volume, that double bottom, all this bullishness, nah. Usually, not taking the trade is the more important trade to take. Or I should say, the more important position to be in. Sammy says, I want to see RSI at this point. I don't know if I can pull up RSI. I'll try. Want me to bet you a dime to a donut what it is, Sammy? I can almost guarantee you the close of that candle, that volume, RSI is 73.1. Think it's over 80? I don't think it's over 80. Let's find out though. I could be wrong. It's happened many times. 65.6. I was close. 65. Wasn't that many candles in a row for it to be 80. I will say to my agreement, we did hit 73 right there the day before. Anyway, I guess I could have factored in that candle a little bit more. It did have a nice little drop. All right. Give me that donut, Sammy. You bet me a donut. Okay? I'm just kidding, man. Microsoft, next candle. Weird. Marwan says, is that bullish with long upper wick indicating a reversal? Yeah, absolutely. Great question. I wouldn't say reversal, but it's indicating selling pressure. But we know there's going to be some selling pressure here because this is a very strong resistance. We are chopping all over the place right now. It's been 2 days. Let me give it one more day, and I think I'll have the trade set up. Ooh, wow. Yeah. There's, like I said, there's definitely some selling up here. We knew that was going to happen. That's an interesting candle. It's not proving itself up here to me, guys. Unless we break above here. We take out that upper wick with a close, by the way. If we're going to get in like this, I need that to close. So that would be my setup. If it can close and take out this bearish candle, yeah, that's proving that it's strong enough to hold. If it doesn't do that though, I'm just gonna move on. Nope, it obviously broke my stop. I'd have to have a stop down here at this point, and that risk reward, it's not great. So unfortunately, I'm gonna be waiting still. I'm gonna wait. Oh yeah, Marwan, good call. But again, we knew that this was a resistance. We literally talked about, could we go short here? And we could have made money on the short side, right? If we want to practice that uncomfortableness of shorting at resistance, that's just not something that I really do. Does it make me uncomfortable? Yeah, I could probably attack it more, but the problem is right now the market's doing this, you know? When the market starts doing, which is probably next year, or 2019, when it starts chopping sideways more, I'll consider it. I prefer to do option strategies up here rather than short the stock. Bear call spread. I'd have to look at some moving averages and a few other check marks, but so on and so forth. Kyle said, I bet it's a juicy double bottom. Yeah, I would love to zoom into that hourly chart and find out. But we got a really nice high wave candle. Here's that purple line, by the way. I still want to trade down to 2780 because these candles are getting wild right now. We're going all over the place. I could zoom into the hourly if I was allowed to try to figure out what this is doing, but I'm going to get another candle. Still looks a little bit more bearish to me. All right, I like that lower shadow. I do. We went bullish down here before. We could do it again. Again, we could have just bought right there. I didn't think that far enough ahead, unfortunately. Now, remember, I mentioned earlier that I want to lose less than 0.8 R on my next trade. So if I put a stop right there, it'd be a little challenging to lose. And this is fun math. This is the cool part of trading because this particular setup, right, this little tidbit is pretty valuable because if I risked a whole R on this trade and lost an entire R, which is possible, then I would be a negative, non-profitable trader after 3 trades. If I take this trade with a little bit less risk, right, still same R, it still could happen, but if I do something like this, and then, maybe something like that happens, and I can move up the stop to here, and then I get stopped out, and I lose, 0.6 R, I'm actually still profitable. You guys follow me? That is me protecting my profits. Once I got profits, oh boy, I protect it. That is my profit. Take your hand off my profit. That's mine. I protect it. I don't want to just throw it to the wolves. I'm not afraid to take the trade, right? Keep that in mind. I'm not afraid to take the trade. I will take the trade. I don't mind risking the money, but I want to protect that profit. So mathematically, if you can figure out how to do that, because all you need is one big trade. That's all you need. Just one monster to come in. So I do like this trade. I probably should have bought right here. I just didn't think that far enough in advance. I'm a dum-dum. I should have bought right there with a stop down there, and then I could have already moved up my stop. Pooh. All right, so I kind of like this candle. Let's see what the next one does. Let's go. So the next one, so this is an interesting play. Because in this particular situation, when the stock gapped up like this, right, this is a pretty bearish candle. Obviously, is that a Marabozu? Let me check. 2 pennies away on either side. Sammy says, why'd you choose end of day on this one? Or, I'm sorry, why'd you choose intraday? I was thinking end of day. If you did end of day, it would have worked. You wouldn't have gotten triggered in. The reason I went with intraday is just because it was out of support and I just wanted it to bounce. Probably should have gone with end of day because of all the volume and everything. I really should have just bought right here and had a stop there, and I can move the stop up to there. That's what I should have done. But this is a little bit of a bearish candle. Now granted, it's only been 1 day. If I had done this in a broker, this would be a stop limit, by the way. Stop limit. I keep writing trigger in today, but stop limit, which means it's two separate orders. It's a stop order and then a limit order. The stop would have triggered at the top, and then the limit would have filled right there. So I would have gotten filled exactly at the price that I wanted to get filled at. 29.53. So, interesting candle. I gotta wait 2-3 days. I might lose my R on this trade. Let's find out. Nope, not yet. Not yet. Harry Potter is helping me out with this one. But what can I do? Well, I can now take my stop, put it below that candle, and I will lose about 0.8 Rs approximately. It's not exact, I want to move it a little bit higher, but that's a good looking candle. It's day 2, volume is coming in. So what I'm going to do is I'm going to tell it that it needs to be above the high of this bearish candle, needs to break above or close above the 7/31/16 candle. 7/31, was that the day? Yep, July 31st. 2007, sorry. And 2 to 3 days. And if it doesn't, like that's me telling the market what I want it to do. If it doesn't, I replan. That simple. Could I get stopped out of this trade? Absolutely. Will I? Probably. All right. So it did break above. I'd prefer a close, but that candle's not bad. So that's day 1. Day 2, yeah, she's coming for me. Day 3, got me to a penny or two. Got me to a penny. So there's a little bit of volatility coming in on Microsoft, a little bit more than normal right here. And again, this is cool. This is going to happen. What we are doing is we are starting to form a little bit of a series of lows. So I'm going to get that drawn in. But what we did on that particular trade is I still protected my profit on the other trade because I'm right at this trade. I probably lost 0.8 R on. I'm at break even now. Maybe a small loss, maybe a small gain, but there's some very interesting volatility starting to come in. These gaps and these moves, like it just gaps and runs. So I'm trying to figure out exactly what it's going to do. For now, I'm going to keep waiting. Let me see, again, plan for the future. So I'm still break even. And the best part is this is after 2 months of trading this particular stock. Now again, I can't zoom into the hourly or the 15-minute or anything like that. I'd kind of prefer to do that. But let me see if we close above, start planning my next attack. This risk reward is kind of okay. It's a 1-to-1 into this next resistance, so it's not that great. I'd like a close above and then buy or retest. That would make my risk reward better. No close still. All right, so there's a close. Man, these wicks are everywhere. So guess what I'm about to do? I'm going to do a limit buy here. I'm going to go get back some of my profit, hopefully. So this will be a limit order. Why a limit order? Well, number one, this is what I said I was going to do 40 seconds ago. Number 2, you got all these wicks up here. You got 3 white candles in a row. It looks a little double bottom-esque. So I want to trigger and then pop, preferably tomorrow. Needs to trigger tomorrow. If it does, since it's so gappy, I'll look to exit portions to hopefully make some gains back. All right, so I'm still at break even. So let's see if this triggers the next day. And if it does, I'll kind of exit in portions up to here, see if I can make a little bit of money. Next day, yeah. So this is all over the place. So something crazy is going on. Now, what I can say in this situation is the cool part about this limit is you wouldn't have filled until right there. So the open of this candle is 29.64. So my entry was 29.77. So that limit is going to help me already lose less than an R, hopefully. Now, obviously, it could gap around. But what I will say is we're getting some very strange candles. They're big candles. They gap and they just run all day. Some really strange volatility going on right now. So I'm probably going to lose on this trade. I'm going to give it 2 or 3 days and move my stop. If I do lose, I'll be down. Less than an R though, still. And then I'm going to go back and look for my next trade. All right, so we got stopped out on that trade. So we definitely got some sideways action going on. Got stopped out, so we're down a little. We're getting closer to our 2780 line. We did come down to this support. There's an interesting lower shadow down here. I can't go out to a weekly, so it's a little bit of a challenge. But I'm going to wait this one out a little longer, right? Because we're going sideways. We're still going sideways. The candles are really kind of gapping all over the place. They're really pretty crazy. If it comes down to 2780, that was the support that we've been waiting on for a while. We're going to try to get it there. And I'm going to place my stop right here. So that stop is below this level. That's where I'm putting my stop, is below that kind of pivot. See that pivot, like boom, boom, boom. Kind of get that little bounce. Now, with this volatility as well, we could also consider some protective puts. We could consider maybe changing our approach. Again, I would love to see a weekly chart, but how about opening up another window? Oh, that's kind of a good idea. It'll be all right, though. It'll be good. I like that support. Yeah, let's see if we can trade down to 27.29. A little bit of a lower shadow. So I'm going to give this one a few days to do some stuff. Giant upper shadow. So dividends came out. I still want to see if I can get it at 27.79. All right, it traded down to it, so it's at that support. A nice high wave candle. Very interesting candle down here, to say the least. So we got a high wave candle on Microsoft at a support level. Key price. We're either going to bounce down or bounce up. Very, very important price here on Microsoft. Great candle. High wave. This candle says a lot. We're either, if we break below here with this candle, I'll consider a few more trades, but until I go 0 for 7, I don't consider myself to be in a losing streak. So let's see what the next candle. If the next candle can bounce, remember I'm down. So I lost on that recent trade, so I'm down. Let's just say an R. Probably a little bit less because again, that gap down, but it'd be about 0.9 R's. Let's just say an R after commissions. Full R down on Microsoft. Next day, that's a good gap. I like that gap. Okay. I need Microsoft to close above the high of the previous day. And if I can make 2 R's on this trade, I will. Longer term, so if I was doing a longer term level down here, like few months or something, I'd probably, instead of the stop, I would use a protective put. And this would be my target. I would just walk away for a few months. Right, if I was doing something longer term. But shorter term, I'm going to try to make 2 R's on this trade. Why 2 R's? Because if I win, I'm down an R right now. If I win an R, I'll be up an R, so I'll be profitable. Is that going to happen? I don't know. Maybe, maybe not. But there's 2 R's. Let's find out. And I'll move my stop 2 to 3 days. Move, stop, and 2 to 3 days. Okay, next candle. Exciting. This is a really strong candle if it can break that high. Well, it kind of broke that high. I like this thing, but you can't really see the candles. I'm just going to move it over. It's a cool tool, but it's hard to see candles. Let me kind of zoom in a little bit more. Now it is retesting that trend line. I get it from the bottom. So that's why it has a little bit of an upper shadow. So that's kind of cool to notice that. Next candle, we're down. And then I'm gonna give it one more day. So it's been 2 days since I wrote my plan. All right, so I'm definitely taking my stop up now and putting it here. So this would be about half an R of risk. New stop and current plan, because I am in the money right now. I'm up on it a little bit. So new plan, because it did not close above that candle, is if this hasn't hit my 2R target in the next 2-3 days, I'll exit, hopefully for a profit. And all I'm doing right now is, again, just creating a plan for what I want it to do. You're getting a bunch of gaps. It's very gappy right now, but I do like this support. Usually major supports like this, they just take a little bit longer to play out. All right, it doesn't happen overnight. I kind of like that candle. That's a nice candle. Not so good. We got really close to 2R, but that was 3 days. And I am profitable on this trade. So I can either increase the stop or I can exit for a profit. Now the semi-exciting news on this one is if I do exit, I'd have to exit sometime the next day. So I'm gonna do a limit sell at 1.35 Rs right there to see if I can get out the next day. And if I can do that, I'll be profitable by 0.35 Rs. Oh, that's hilarious. It actually didn't hit it. It didn't quite get there. So that would have been one of those timing things where if you were by the market right before market close, could have set that up, right? Because again, that's just that plan. That's all that is saying, hey, if you moved your stop up to here, you could have gotten trailed out, obviously, for a little bit of a profit. And that's one of those, like I mentioned just a second ago, it's one of those timing things. It depends. If you buy your computer, you can set that limit up, right, on this day because you're like, all right, well, it's obviously not going to hit my 2R target. We got pennies away on this day right here, literally pennies. So what I will do is I will simply say I'm still in the trade. I'll do worst case scenario with you guys. I'll say something happened, I'm still in the trade, I'm still scared. I'm gonna have my stop right below the low of that shadow, see what happens next. And next, I would have exited right there. If I left it open, I would have exited right there the next day. Again, had I not gotten out. So that's about a timing thing. That's all timing. But in this situation, I mean, with this candle, yeah, it's a little bit bearish, but that's a very interesting candle that just shaped up as well. So the cool part is, with just that plan, so all I did right here, this plan is purely just called, hey, let's make a little bit of profit. That's what that plan's called. We've been in the trade. If I'm trying to pay my light bill and I'm trading Microsoft, I'm not doing that great, but I am up. And that is what matters. 0.35 R. After commissions and everything, I'm up, let's just say, a quarter of an R. Nothing amazing. But if you factor that in and maybe 4 or 5 other stocks, right? Potentially you're doing pretty well. Maybe, I don't know. Right? We can definitely say the stock is pretty sideways. We can get that out. But we have a really nice one white soldier candle. It did retest that 27.80 call price. Good call on that one, Sammy. And so we went from June. So let me just go 2 more days so we can say we back traded 3 full months. So we went from the very beginning of June. So all of June, all of July, all of August. 3 months, took an hour and a half. That's about how long it should take you. Now, it might not take that long because, explaining stuff and drawing stuff. But when you're doing it, do each candle and don't just go, don't do something like this. Don't go like, all right, well, here's what I'm going to get in and the trade's going to bounce off the support. Now, what I will throw out here really quickly is earlier, you guys remember what we can do is we factor in these candles and go, look at this beautiful. Anybody remember this candle? If you haven't taken my beginner's class yet, that is the one white soldier candle right there, my friends. That is it. at a support, at a major support, all up on that entry. Longer term trades, I think, are much easier. And I think that should be a phenomenal, really, really powerful message home. That if you bought in right at September 1st or something, right with that one white soldier, you would have had to held 2 months to hit your target. But that would have been about a 17% return. And if you had a trigger right here for protective put, and you got into the trade, type in a 1 if you remember me saying that. When I buy really strong supports, right, if I'm buying the stock, I'll have a trigger for protective puts. If I want to be in it longer term, or if I want to do an investment, I don't let the stops whipsaw me, right? I'll have a protective put, it'll do its thing. But if you have a really powerful support, give it some time, let it do its due diligence. That took right there, I mean, what we back traded took an hour and a half. When we just pressed forward, that took 10 seconds. But what you can do is you can use this analysis and go, what a beautiful double bottom that was. Phenomenal. And we traded this little part right here. We could see that we're sure some bulls got trapped right there. Probably got in, got out too early, waited. But this is the only candle that you need to see. I mean, this is your support line. So this is your support line. Be buying off of that. That's what we did on that candle right there. And again, if we were practicing longer term time frames, if that was our goal, if that was our intention, really pretty easy. All right, get an idea of where you want to buy there, and put in your brain, yeah, it's going to take about 2 to 3 months. That is bonkers how well that works. I mean, this exercise in itself, just seeing firsthand the sentiment of the people buying. Whoever bought here last time and made money, they did it again and they made money. That is 2 separate instances. Just in the last 3 separate instances. Right? Here, here, and here. Now this one over here would have got a little bit whipsawish. So you might have gotten stopped out and then you had to take a trade over here. I kind of get that. Right? You're going to bend the trade a little bit. But when you're buying, when you're trading these sideways markets, usually the hardest thing about a sideways market is the moving averages are always going to tell you no until you're like right there. Right? So let me pull up these moving averages for a second. If you're a big proponent of moving averages, and again, I like moving averages. There's nothing wrong with it. But if it's in a sideways market, right? Moving averages told you no until, like I said, right about there. And that's where the moving average crossed. And you could have gotten in there. That's fine. Right? That's cool. If that's your strategy, you would have made a little bit of money. Moving average cross over here. But if your plan is to, all right, I have a really good support, I'm just going to buy off of that support. What else other confirmation do you need? Wow, look at this thing. That's an interesting gap. Any questions so far? Awesome session, by the way, my friends. Very well done. Incredible learning experience. That was a good time. This is a great session, Jeremy. Thank you, man. I appreciate it. That was some work. Now, go do this again a lot until you can build that plan, have those strategies in place, or have those rules for what you do, when, where, why, and then you just kind of follow them. Again, give yourself permission to be your own wizard. Ask questions, figure out why the candles are doing what the stock's doing, what are people thinking. And again, just do it with candlesticks and support and resistance. You know? Really challenge yourself to understand the sentiment of what people are doing and why. GW says, do we need to pay on TradingView to back trade? That's a good question. I actually do not know the answer to that. I apologize. I think you can do it for free, but I'm not entirely sure. I will say if you have the free version, GW, look at the very top of this, and if you have this little arrow, then you can do it. You probably have to pay, but TradingView is like $19 a month if you're paying for it. That's pretty meager. There are other ways to do it though. So let me just X out of this really quick. And I'll show you, if you want to do it and don't want to pay, which again, I get it, I understand. If you want to go candle by candle, just take the chart and just drag it back. Just like forcefully drag it. Now you can't see the future, which I know all traders like doing that. but you just have to kind of go forward a little bit. Go candle by candle, like actually drag the screen with your mouse. Right? So if you don't have the arrow, it might be a paid version. I do pay for TradingView, so that would make sense. Marwan says, is it true that a market maker can see stops that we put? So let's talk about that a little bit earlier. It's a very good question. Yes and no. The reason I say yes is market makers can see where stops are, but they don't know their stops. That's the thing. Market makers just see buy or sell. Right? So if you bought a position and you got a sell order there, they don't know if they're giving someone the short stock or if you're selling your long position. They don't know that. So they don't know if it's a stop, because what you have to understand is stops are your friend. Because a stop, my friends, a stop is literally an alert in a broker. So the market maker can't see stops because a stop is an alert. It's literally what it is. What they can see is they can see your sell order, right? Because that's what it is. If you do a stop and you have a market sell order for 100 shares at, $50.69, they can see that someone out there wants to sell at 100 shares at $50.69. They don't know if that's a long position or a short position. Because again, a stop in a broker is just an alert to do something. Because you can use a stop to get in or get out. Now, I could be wrong about this. I'm not a market maker. I have spoken to market makers before. Potentially he was lying to me. I don't know. But he said, no, we can't see stops. We can't see an order that says, this is Brad Hauser's stop to exit his position. They have no idea. They can see sell orders and buy orders, and they can see lots. But here's the thing, Marwan. Did you know that you can hide your orders? You can hide orders. You can also do what's called iceberg orders, where it looks small, but it's really big. Where you put in a fake position size. So that's really interesting to know, because a lot of people will use the market maker excuse for the reason they're getting stopped out. But guys, I'm sorry. Everyone, if you're taught the same way about everything, like right here, for example, you know how many people are taught to just put their stop right there in that trade? So they get in bullish here and they set their stop right below. I mean, that's everybody. Everyone's taught that way. Richard says, I can confirm you definitely can back trade like this without paying for it. Just tried it and it all works. Very cool. Kate said that also, and Sammy. Thanks, guys, for confirming that. I really appreciate you doing that. So, but Marwar, that's a really good question, man, because here's the thing. A lot of people do teach that, market makers can see your stops and they run stops. Again, that's kind of like arguing a little bit politics, right? Because someone's going to have one opinion and someone's going to have an entirely different. Because they can do things where they go and fill a bunch of orders, but they don't know their stops. Does that make sense? So they can see a bunch of sell orders and they go and fill those sell orders, but they don't all know their stops. They could be shorts, And again, you can justify that and prove that when you're trading, back trading like this, and you can literally not even be in the market. The other interesting thing is, but at the same instance, there are trades that do work. Look at this. Like, how do we explain whoever the heck bought right there and made a snafu amount of money? Right? Oh yeah, I totally understand your question. No, it's a very, very valid question. That most of the time, if you're in a trade, you get stopped out and then the trade keeps going higher. So I was kind of trying to discuss that some tonight. That's usually a waiting thing where you'll move the stop too high and you're not letting it retest, right? Because all stocks move and retest, or your timing is off and you're getting in at the wrong time. It's one of these two things. And that one just takes practice, unfortunately. There's no real methodology. So let me give you the best example I can. I'm seeing one right here. So in this situation, you have a phenomenal one white soldier candle. Drop dead gorgeous. You're not taking that trade. You are wrong. Wrong. You're not getting in here bullish. Just go pack up and start a bed and breakfast in Connecticut, because trading is not for you. If you're not going bullish down here with this count, I mean, come on. You got a gap down, everyone's shorting the stock, and you get this candle? I mean, come on, guys. You got to try it. So, anyway, so Marwan, let's say what you do, and this is probably a very good example, and this is, I'm not picking on you, I promise, that you're the one that brought it up. So let's chat about it for a second. Let's say that you see this trade, and then you go, all right, I like the candle, but I want a little bit more information. So that the stock gaps, and you go, well, it's moved a little bit too far, so I'm not going to get in yet because I think I kind of missed the trade. And then this candle comes in, you're like, oh man, I'm missing the trade. I should have gotten in back in here. What a dummy. What am I doing? Why am I not in? And then what you do is you go, I'm missing the move. Shoot. So you get in right here. Right? This is where you get in, right there, after it's made its move. And then you have your stop right here, right below that low of that candle, just like you were taught. And then the stock comes down, wicks you out, and then runs. That's probably happened to you, Marwar, a million times. The reason is because you did not get in when you were uncomfortable, which was right there. When you had the least amount of signals. When you had all you had was volume and candlesticks, that's when you need to get in. And if you didn't, what you needed to look at in the chart was this gap was a retest gap. It was a retest gap. So you had to wait for the retest. You needed to wait for that S curve. This is the biggest, most profitable pattern, my friends, that you could perfect. If you want some homework, all the rest of the 46 of you who are still here after almost 2 hours, if you want some homework, I know this is really dumb homework, but go get flashcards or a piece of paper or a notebook or something and draw a bunch of bullish S curves. Right? Go draw a bunch of these and then do this arrow. Where I used to get in. Am I right, guys? And then draw it down here where I get in now. Where I get in now. Get in with that pullback, that dip. Because look at this. This is the exact curve that you get right there. It's the exact one. It's uncanny, man. It's insanely good. So when you have this retest gap right here, you have to expect that S curve to come in. So again, I'm not a perfect trader, guys. I lose all the time. But I would have had a limit buy at this blue line if I wasn't already in. I'd be getting in there. After this candle came in, after this bullish candle came in, I would have then set up the trade, get in on a pullback, and I would set my stop below that candle. And then I would have expected that retest to come in. Once the retest came in, then I would move my stop below the low of that candle. Now again, I know this is hindsight. I know I can see that that's going to work. But even if you didn't take that trade, then getting in right here with this phenomenal bullish gap and go after the retest comes in, here's the thing. And again, what most traders who lose consistently, what they'll do is they won't get in there. Sammy, why? Why won't they get in right there? Because they're uncomfortable. It's only day one and they need to see more. They go, I'm just not sure. So you're uneasy, you're unsettled, you're kind of scared, you're a little uncomfortable. But that's where you should get in. Like when that gap occurs, and the challenge with getting in right there is you had to plan that in advance. So once this pattern formed, this little stair step pattern here, that next morning when that thing is gapping, you're getting in around here somewhere. You're setting your stop either down here or down here, and you're getting into that trade. What a lot of traders will do is they'll wait too long. They're going to wait for confirmation. They're going to wait for everything to set up. They're going to wait for it to close above resistance, right? Okay, closing above resistance. Whew, finally, now I can get in. And what do? They get in, they set their stops right there, and they get stopped out. Come on, guys, type in a 3 if that's happened to you 100 million times. That can stop right now. That's really simple. You got to get in earlier. You got to, confirmation does not exist. Look for good patterns, look for good sentiments, look for good candlestick patterns, and get in early. Right? Pretend you're a banker and you got to tell people when to get in. You're not going to be waiting for the absolute highest of the high. Get in on some S curves. Get in on some pullbacks. Get in on some dips. Buy into weakness, my friends. S curves are everywhere. There's one right here. There's one right here. There's one right here. There's one right here. There's like 4 of them right there on the screen. Here's another one. There's 5. Here's 6. They're everywhere. Those waves, those patterns. That's Fibonacci analysis, whatever you want to call it. That is just market structure. Buy dips. Don't wait for the trend to do this and then you get in. Because if you wait that long, just don't take the trade. You've missed it. And the really, really crummy part is someone probably did get stopped out right there and then it gapped up. And the reason I know that is because I could look at that candle and go, yeah, that's a bearish gap and go. People are trapped. And I will be looking at a bullish trade up here. And there's the S curve. This is where I'm buying right there into that dip. So do that homework for me, folks. Draw those S curves. At the bottom of that S curve, say this is where I'm buying and this is where I used to buy. And drill that into your brain. Do not buy on a straight up trend. Let it pull back. Buy into that dip. You don't need confirmation. The trend is literally your confirmation. If you can look at the trend and go, oh, yeah, it's bullish, then buy a dip. Find a good place that you want to buy and buy there. Is it a moving average? Is it a price? Is it a candlestick? Hourly, daily, weekly, whatever time frame you're trading, buy that dip. Clive says, this has been by far the most informative trading session you've done. To walk through the candles and discuss the sentiment as they unfold is amazing. The trading rooms were much so quicker, it's easy to miss the whole story. Yeah, I appreciate you saying that, Clive. That's why I want to do them a little more often. So I'll be doing some more, I'm sure, in 2018. This is in the room when the market's live and you get those 5-minute candles, it's a little bit faster. But this is doing this and talking about the candles and looking at the sentiment and explaining it. I'm very honored that you were all here. GW says, does drawing the S also work on breakouts? No, don't take breakouts. Take these right here. Because this is the breakout and this is the breakout. Right? By that time, the trade's already done its thing. The only time you want to take a breakout is when the consolidation is just unbearably obvious. Like right here, the best one I could find. Still an S curve, but you got this conglomeration of candles that do nothing for an entire month, and it's just trading and trading and trading and trading and trading and trading, and then you get this candle. That's the breakout, and you got to take that. You got to get in there. But breakouts don't happen all that often, right? But then again, here's your S curve right there. Right? So breakouts, they can happen. Yes, they're fast. You get a few days of the breakout, and then at some point, it's going to S-curve on you, and most traders will sell at that point anyway. I'm trying to find another good breakout candidate. Because again, it's such a good question, GW, because most traders, most analysts, for some rare reason, right, they only teach breakouts, and you'll get in, for example, this setup right here, this is the breakout right there. Getting in this morning. Most traders will get in here and then get out right there. But you got to get in early. You got to have it pre-planned. If you're going to take a breakout, you need to know about that thing like days in advance. But then, look what ended up happening. S-curve, right? And if you took this breakout, here's the resistance. And if you took this breakout right there and got in bullish there, you got a little bit of the gain, sure. You got some gains, but then it ended up S-curving again, coming back to that support, and you better be buying there. You gotta bury that into your brain, because that is not a breakout. Like that is just simply candlestick patterns at a obvious support level. Get in. Don't be waiting to get up here. Oh, it's broken out. It's finally confirmed. Womp, womp, womp. Don't do it. Buy early as you possibly can. As early as the candles give you, and then just get in and then just mitigate your risk, because you might not be right. But what if you are? What if you are right and you catch the very bottom or a very good support and you get to ride it all the way up? That's what's the most challenging thing about support that most people feel, is that there is only the line. And they see that line. But look at, type in a 1 if you can see like at least 4 S-curves on this chart. I can draw all of them, but here, I mean, here's a big one right here. That's an obvious one. But you have one there, you have one here, you have one here. So when those S-curves come in, it's like as that stock starts pulling back, and you can draw these on your screen, you can use fibs. Yeah, Tim, you're totally right? These are fib retracements. Just buy those dips, buy those pullbacks, and I realize there's no quote-unquote confirmation usually, but once you know what the trend is, once you have this, I mean, it's screaming at in your face that I'm bullish. That's all you need. That is all confirmation is, and I have another video coming up about that soon. Bearish, yeah, so let me find a bearish trend, and I can find bearish S-curves. They're also everywhere. Bearish, GoPro. I'm trying to think of what's in a bearish trend. Bearish trends, here's a nice little move, right? So bearish S-curves happen a little bit faster because when the market sells off, she goes bananas. But here's one right there. Here's one right here. Here's one right here. There's 3. Here's one up here. This is called the retest. I mean, this is what I'm looking at shorting. Right? Anytime I'm in, day trading or whatever, I'm always looking to short the S-curves. Something like that. There it is. There's one. There's one. There's one. There's one. Go find another thing that moved bearish recently. Alaska Airlines. Yeah, pullback, retest, retracement, whatever you want to call it. Absolutely. Now again, you still get them, but they're just a little bit faster because bearish trades move quicker. So you get this S-curve. All right, look at that. Beautiful. Now, the cool part is, could you have gone bullish right there and you would have lost money? Absolutely. Could you have gone bullish right there and made a lot of money? Yep. And then it came back, used that exact same support. Bullish, bullish, bullish. S-curve, 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 S-curve. And again, most markets move bullishly. Most trends move bullishly. Yeah, it's cool to make some money in the bearish trends because they happen fast, but mostly want to go keep a lookout for those bullish trades. My friends, that was a 2-hour class. You guys crushed it. Marathon of the mind. Max says, thanks for the lesson, man. Keep on keeping it on. Dude, you know it. Absolutely. Well, all I can say, folks, only thing I would like you to do, if you got a chance to stick around all the way till right now, go tell some people about real life trading. Go tell people about trading in general. Go tell people about how awesome you are. Let's go enrich lives together, because here's a fact of life. Money is everywhere. Wealth is abundant. Everything in the world is wherever you want it to be. If you want something, just go find it. It's there. Go look, go ask, go talk to people. If you want trading buddies, if you want more money, if you want more experience, you want better cars, houses, better trips, better vacations, more happiness, it's all there. Just go find it. Thank you, ladies and gentlemen, for helping me enrich lives. It's truly a privilege, blessing, and honor to be with you each and every day. I'm going to wake up, do it again tomorrow. And that is, of course, enriching lives. You're awesome. I will see you later. And until next time, love life, live life, and trade it. You guys rock. Bye. Woo! You made it through the whole thing. Fantastic work. Well done. That was about a solid hour and some change. And I'm really proud of you. A lot of people will not make it through the entire video just simply because they get bored. But you did it. So thank you for being here. I truly appreciate it. Again, if you have any questions, you can email me anytime, Jerremy@reallifetrading.com. That's my personal email. Sometimes I have a robotic dog that replies to the emails, but I'm just kidding, it's me. Me and me alone. I look at the inbox every single day, try to do my absolute best to answer as quickly as possible, so if you have a question, shoot it at me. Also, you can post any questions in the comment section below. Make sure to hit that beautifully red colored subscribe button. I post videos like this all the time and they're free. I want to help you enrich lives. That's the mission of Real Life Trading. You probably heard me talk about that at some point in this particular video. Let's enrich lives together. Let's do this. You rock. And until next time, love life, live life, and trade it. See ya. Bye.